Let's talk more specifically about Nike now, which had also warned of those soft sales in China. But the stock is surging today after announcing CEO John Donahoe is stepping down and company veteran Elliott Hill is coming out of retirement to replace him. Here to talk about what this means for the future of the sneaker giant, Brian Nagel is a senior analyst at Oppenheimer. He's gotten outperformed, sticking with it, $120 price target. And Brian, it's worth repeating, as Dom Chu pointed out last hour, Nike shares are down about 50% from their pandemic highs. How do they fix this story?
Well, yeah, thanks for having me on. Look, I think the issues at Nike have become pretty well known, okay? And really, there's probably two buckets now. I mean, one, they need to revitalize product innovation. And then second, they need to re-embrace the wholesale distribution. And I think, this CEO announcement they made last night, I think is very much a step in the right direction, because they're bringing back a proven, successful executive of the company who, when he was with Nike, Nike was performing much better. And so I think this, again, there's still issues for Nike. There's challenges. It's going to take time. But I think this CEO announcement is very much a step in the right direction.
But to Tyler's point earlier, there's also the little problem of massive competitive pressure. I mean, the sneakers from On are ubiquitous. I see them everywhere. The same was true of Hoka a couple of years ago. How did they miss a step on the fashion?
Well, look, I mean, Nike's a massive company, right? Okay, so if Nike's misstepping, losing connections with consumers, that does open, to some extent, opens an opportunity for smaller players to come in. And I think that's exactly what happened. Now, we'll see. I mean, my sense is, and having studied Nike for a long time, is that there's still an underlying consumer demand for Nike. I think if Nike gets this right, Nike starts to introduce better product, more innovative product, and is selling these products where consumers want to buy them. We're not talking about these wholesale partners. I think what's going to happen here is you're going to have a shifting dynamic. I think, look, there's some of these smaller companies have done very well. Maybe they have staying power, but I think they're going to be fighting against a stronger Nike, and that's going to be much more of a challenge.
It's very interesting to me what's happened in the world of sneakers. I'd be interested in your thoughts on this. Sneakers have gone from being athletic wear to being everyday footwear, and that has also, I think, benefited a couple of those competitors that Kelly just mentioned, whether it's On or Hoka or Ball Star or a whole host of them that are fashion items as much as they are functional footwear, and certainly not necessarily athletic items, which has been the sweet spot for Nike for decades.
No, that's a great point. And what that basically means is that the market for what's called athletic footwear has expanded significantly. In that sense, where the market share is coming from is traditional footwear companies. I always make the joke when I'm talking to our clients, I don't see as many loafers out there anymore when I'm either in my office or the offices of our clients. A lot of people are wearing sneakers. So, that dynamic is very much happening. And I think that, again, going to Kelly's question, I think, that opens an opportunity for, reemergent or reinvigoration of Nike, and maybe still some success of these smaller players that have performed well over the last few years.
Bring back the loafers, Brian. Bring back the loafers. You got to visit my closet, man.
I've got a lot collecting dust as well. I don't know what to do with them.
Yeah, you just can't find a good tassel loafer anymore. Brian Nagel, thanks, man. Appreciate it.
Thank you. Nice seeing you.
Okay.